Hey guys, what's going on? Welcome into the video. So we had a big development in the stock market last week, including a major breakout that we're going to talk all about in this one, including risks to that breakout, what to watch out for, and a bunch of individual trade ideas along with it. So let's go ahead and get on into it. And as always, there are timestamps in the description. Starting out, let's take a look at the breakout that took place for the S&P on Friday. So these two major trend lines that we've been talking about for months now broke above, which is a major development for the market. Now this doesn't mean that we're out of the woods yet, and we're going to talk about some risks in a little bit, but for the time being this is a clean breakout and the S&P is set up for more upside until proven otherwise. So these trend lines are now at 42.78 for the long-term trend line and 42.50 for the broadening wedge pattern, which started that breakout move on Friday. As long as that holds now, continued upside is in play direct. On the upside, the next major resistance area to watch is at 4,300 to 4,328. 4,300 is a key psychological level, and then 4,328 was highs from last August. A couple main scenarios to watch out for moving forward is the immediate term bull case could look something like this, build a bull flag for a couple days before breaking higher. Potential bear case to watch for though, and result of that would be a look above and then fail below those 43.28 August highs. A top being put in will often trap buyers first, which could be seen with that break above August highs, which ultimately fails and traps those buyers. And then just a simple immediate term bear case would involve failing and holding back below those key trend lines, which would just be a simple false breakout and trap those breakout buyers from Friday back below 42.50. Now one major technical risk to this trend is shown with the Bollinger Band's indicator. We have not had a clear daily close above the upper Bollinger Band since the market topped in January of 2022, and we got that signal for the first time in a year and a half on Friday. As we can see based on recent price action, the upper Bollinger usually caps upside when it's broken above and usually results in a daily candle closing back below it. Clear daily closes above it though are rare, and like what just happened on Friday, is seen as a larger exhaustion signal and often results in sizable pullbacks. There were 6 clear daily candle closes above the upper Bollinger from June 2020 to May 2021, and 5 out of 6 of these times resulted in a sell. In June 2020 resulted in a 9% pullback, September of 2020 resulted in a 10.5% pullback, October of 2020 resulted in a 9% pullback, January 2021 saw an initial 2.5% pullback, made a slight higher high after that, before a larger pullback afterwards. And then April 2021 did not get a pullback and just grinded higher, and May 2021 saw a 5% pullback. So what can we take away from this? Well, indicators are never the end-all be-all and are just tools to help support your thesis. So it obviously doesn't mean to just blindly short stocks here, but you could use it as a signal to start taking some profits on some large caps that have performed well recently, or wait for some confirmation along with it to short, which could be getting a daily close below that key trend line at 42.50. Now getting back into some market fundamentals, I highly recommend watching this quick interview from Carlson talking about market liquidity and flows that you can find on his Twitter. Now along with this, the stock market just had a record weekly inflow into tech stocks, and it was by a long shot. What this tells me is investors are absolutely flooding into tech stocks, and now that is becoming a very, very crowded trade. Crowded trades like this will often result in unwinding, and the opposite of what the crowds think will play out. Let's just take a look at some of these recent big movers. Broadcom, ticker symbol AVGO, Marvell Technologies, ticker symbol MRVL, MongoDB, ticker symbol MDB, and of course Nvidia, ticker symbol NVDA. These have all seen massive gaps on hype around AI, but these gaps are not healthy at all in my opinion. They are now very crowded trades, and it is pricing a lot of upside in earnings already that will not be here for a long time, reminiscent of what happened with the electric vehicle stocks back in 2020. Now that doesn't mean I'd be shorting these stocks or anything, it's just the market environment to be wary of that we are now in. One very bullish thing that happened in the market on Friday though, was the Russel 2000 small cap index broke out of its range that it's been stuck in since March 10th, so about 3 full months. 180 to 180.5 was the key breakout zone, with the 200-day moving average just below there at 179.89. If this breakout holds, the next main target could be the 188 to 190 next key resistance zone above, which has acted as a major pivot shown with those arrows that are marked on the chart. A trade idea for the week ahead could be to watch for a pullback or a bull flag to retest the breakout zone as new support, and if it holds, look for continued upside to 185 first, which would be likely to be a pullback or flagging spot, and then push to 188 to 190 zone next above there. There's always a chance that the breakout fails though, so this would be a no touch for me if it was to break and hold back below the 200-day moving average at 179.89. Now taking a look at a few individual long trade ideas, focusing on some small/mid caps and names that are not overextended. Corsair, ticker symbol CRSR, recently broke out of its long-term base above 18 and is consolidating just below $20 key resistance now. It now needs a daily close above 20 for the next leg higher. So this could be an entry on a close above there and then use 20 as new support or a pivot for a stop loss if there was to be a daily close back below it. AirBnB, ticker symbol ABNB, is another which has built out a nice inverse head and shoulders base and reclaimed back above both major moving averages. On the upside, 120.5 to 121.5 is the next resistance zone, and then 130 to 137 next above there. Could wait for this to form a bull flag before entering and setting tight risk, or use a close back below the 50-day moving average for stop loss areas. Boeing, ticker symbol BA, is another which has formed a 6-month long and very tight bull flag. The longer and tighter these patterns are, the more explosive the move that can come out of it. Watch 215.5 to 220 as the resistance zone above to where it can see the breakout above there. And then one more is PayPal stock, ticker symbol PYPL, which is heavily oversold and beat down and was able to hold its long-term support at 58 to 60. Some short-term pivots are at 63.25 and 64.4, where above 64.4 can start a leg higher with the next key levels above there at 69.7 and then 71 to 72, which is where it started that recent sell on the break below. You can set tight risk on this either below 63.25 or wait for a break above 64.4, where then that could be your stop loss afterwards, and then target those upside levels above, which is a very nice risk reward setup. And one very important stock to watch this week for the broad market is going to be Apple stock. So Apple has their WWDC event on Monday, June 5th at 10 a.m. Pacific time, and this is the event where they announce all of their new products and developments. And for those who remember, this event will often result in a classic sell the news event. It gets that run up on hype towards the event and then often sells off afterwards because of all the hype and expectations have already been priced in. Taking a look at the technicals, the stock has been riding up in this channel since February and is now testing the rising trendline resistance, also very close to all-time highs at 182.94. What I'm watching for on a potential sell the news event is a break out of this channel, which would also be an exhaustion signal, a quick sweep above highs, and then a potential sell to start from there. For example, it could play out something like this and could make an entry short if it breaks back below 182.94, and that also gives us an easy pivot to play off of. Having a stop loss of 182.94 was reclaimed back above afterwards. I would not be trying to call a top on this into new highs. I would only be looking for that false breakout scenario with that potential break above and then fail back below, where I could play tight risk above that previous all-time high. So that is everything that I'm watching for in the week ahead. Letting you guys know that I will be out of town next weekend, so no video next week, but the week after I will be back. So good luck trading everybody this week. I will catch you guys next time. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch list, and can ask me any questions in there. Catch you guys next time. Good luck this week, and peace out.